Hello everyone, this is Kishore. Welcome back to my channel. Today I'd like to share my analysis on gold price and also I'd like to talk about tail and headwinds of the gold price. I see some historical pattern comparison between 1970s and the current environment and I'd like to share some of the historical gold prices as well. And finally US dollar index. This is not a financial advice just for knowledge purpose only. Let's jump into the show. This is a 3 month chart on XAU USD gold spot price. If you see here from July 2005 to July 2011, the price went up. After that, some few years sideways, and then from October 2012 to it went to the downside till October 2018. From October 2018, the price went up till July of 2020, and then from July 2020, the price went sideways till October 2023. From October 2023, the price went up. So if you see here, there is a period of parabolic rise, sideways, and then sell off, and again it breaking that pattern, going sideways and going up. So the long-term chart looks bullish to me, even though the RS is at 85 overbought region. There is a historically there is a uh, reference like even it is above 80, it went continuously like that, and the price also went up. So the momentum is still intact. The price can go up from the current levels based on this historical data pattern. And this is monthly chart, a dry Fibonacci level from 2012 1920 level to the 1054. And the Fibonacci level 2.618 is 3324. Recently we hit that price, and after that couple of months the price went sideways. And right now we crossed above that and we are about 3586. If the price stays about 3300, and I'm bullish on this gold price, and it can hit to the 4192 levels. And this is the weekly chart. On the weekly chart I see there is a symmetrical pattern on gold price action, and last week it break that level, the symmetrical pattern upside, and based on this pattern the target is 3755. So the monthly chart, weekly chart, and also the 3 month chart looks bullish to me. And now finally the daily chart. Right now we are above 1.618 Fibonacci level of April high, and try a Fibonacci level from the April to the low of 3300, 3276, and it break this level in this month. And if you see here, the price went up like anything after Jackson Hole meeting. The Jackson Hole meeting happened in August 21 and 22nd, and after that Powell said there is a chance of September rate cut. After that news, gold price started rising, and it hit that Fibonacci level of 23358. If it is stays above 3587, the next target is 3682. It is a daily chart. So why after Jackson Hole meeting the price went up? Maybe there is a chance of stagflation. So the data point right now it says it went up after Jackson Hole meeting, and this is the gold futures prices. In next 21 months, gold price may go up to the 3080 per ounce. But this is a futures market, so if they follow the trend, if there any change in the price trend, they can change their position pretty quickly. And this is historical demand and supply. I would like to see why last 3 years after October 2020, why the price went up, who are all the players in this. 2022, 23, 24. These 3 years, the major change compared to previous years, central banks are buying a lot in last 3 years. And is that stay same now? Is it intact now or not? And this is the last quarter central banks purchase and the sells. I see more purchase than the sales, so looks like the intact of the tailwind is still there. So the central banks are still buying the gold, and this is foreign central banks hold more gold than treasuries. And this is a chart from the 1970s to the 2025. If the yellow line is the gold price and the blue line is the treasuries, I'll talk about only gold for this video. And if you see here in 1972, at the time foreign central banks bought the gold, and again in 2018 also we saw that gold price went up from 1100. At the time also foreign central banks started buying based on this chart. Now we are buying, still buying. So the central banks are buying in 22, 23, 24, and still that is acting as a tailwind. It did not turn to the headwind, so the tailwind is still there in the gold price. And this is a report came in the gold world council and gold market commentary stubborn stagflation. So this report came on September 5th. So what they're saying is US stagflationary forces and the prospect of lower rates alongside policy risk could dominate prices as emerging market demand takes a breather. So there is a high chance of stagflationary force are there. That's the reason gold prices is going up. And if you see here, gold ETF flows provided plenty of support, especially late in the month, means after Jackson Hole meeting, posting 5.5 billion of inflows of US dollars dominated by North America and Europe. So last month, lot of inflows came, ETF inflows came from North America and Europe. So we already see central bank purchase acting as a tailwind. On top of that, US ETF inflows came from the North America and Europe. So both acted as a tailwind to the gold price. That's the reason you can see huge jump in the gold price. And this tells gold ETFs holdings and flows. If this is July 2025, so you can clearly see here North America, Europe, they are buying a lot compared to Asia and other countries. And this is between a rock and hard place. So we saw a report saying that there is a stagflationary force are there. So, and this tells the blue line is more cuts expected, and the secondary y-axis you can see that number of cuts expected. They are expecting more cuts during the time of inflation. More inflation is expected. The purple line is the inflation. During the high rise of inflation, generally interest rates increase. But now we are expecting more cuts during the rise of inflation. That's the reason why stagflation is expecting by the many of the economists. And the purple line, what is the purple line? Is a 2 year ahead inflation swap rate, and the blue line is 20 days of Fed rate cuts expected. So what is the inflation swap rate is expecting? There's a high chance of inflation can go up, but Fed rate cuts are expecting more. That's the reason there is a high chance of stagflation. And this tells what are the different players in the gold market. So the blue line is US ETFs and what are the forces and when do they buy. US ETFs based on this data is from the 2000 year 2000 first quarter. Based on this historical data, US ETFs inflows are happening during the time of stagflation or they when they care about the stagflation side. And managed money, this is like a CTS, commodity trading advisors. They follow technical analysis, they follow the technical trends and all based on and also they care about the interest rates compared to the stagflation economic situation. So right now they are in the silent, they're not doing much purchase based on this data. And next buyers are non-reportable, which is the retailers, and the other one is US bar and coin. So a lot of bar and coin is happening after US ETFs. And this is I put gold chart in the top and the bottom I put the 2 year bond yields. So there is a relationship between these two, inverse relationship. So when 2 year yield is going down, gold price went up. And again it happened in year 2018 to 2018 2020. At that time also gold price went up. Now again the 2 year yield is going down from October 2023 and the price is going up. So there is no change in this trend of that US 2 year yield. So still it is going down. So I'm expecting there's no divergence. So still the gold price can go up. And again, this is another chart. I put the 2 year yield bottom as is, but the gold price is replaced with the Fed fund rate. So when 2 year yield is going down, it is followed by the Fed fund rate is also going down. So you can clearly see initial the lead, it acts as a leading indicator. The 2 year yield is going down at the time Fed funds are a little bit of pause, and after that it went down. So again, it happened in 2006 to 2008, and it happened in 2018 to 2020. Now again from October 2023 it is happening. If you see here from the beginning, we see these dates in every chart. So from October 2023, the two yield is going down. Now it's in the Fed pause for almost more than a year. After that, there is a rate cut. Now we are expecting more rate cuts based on this chart, and also we saw the data in the stagflation report. And what is driving stagflation? Okay, we are thinking that there is a chance of stagflation is coming. And what is causing? Based on during COVID pandemic time, lot of monetary fiscal policies they expand their balance sheets and lot of money was printed, and it may cause a stagflation. And it similarly this kind of thing happened in year 1970. In 1970 also early 60s, late 60s and early 70s, lot of monetary and fiscal policies helped to expand the balance sheets and lot of money was printed. So that kind of thing is created stagflation in 1970s. So looks like very similar to that happened in year 2020 in the COVID pandemic time. So that's the reason we are I see some kind of similarity between 1970s and now, and that's the reason people are expecting the stagflation. It's happened similar to very close to the 1970s. And this data says okay, during 1970s there is stagflation happening. Okay, what are the different assets perform at that time? You can clearly see in this chart 1971, 72, 73, 74, 77, 78, 79. Only 2 years stocks perform well compared to other assets, but during from 1971 to 79, gold did really well compared to any other. After gold, commodities followed, so you can clearly see after gold, there is a chance of silver, copper, they may rise as well. So based on this chart, if you see okay, gold rised a lot, it may go down. But based on this chart, during stagflation time, how long it is, it looks like almost 9 years. So gold still bullish compared when I see this kind of chart in the stagflationary conditioners. And if you wonder like what the gold price in 1970s and after 10 years, in 1953 it is $34.84, but in 1970s it's $36. Very few increase between 1953 and 1970. But after 1970 it went up. By 1980 it went to the $615. See, from 36 to $615 by the gold in less than in just 10 years, it's it's really wonder like how much gold price rised. And this is the DXY performance of for each year since 1972. So the yellow line is 1973, the red line is 2025. This data is still only July. So it is almost very similar to the 1973. So we saw that there is a stagflation happened in 1970, and we saw that gold, how the gold price is related to the 1970s, and now we are seeing how the DXY is related to the 1973s. And this is nominal emerging market economics US dollar index. Even though USDX, the dollar index is flat or sideways from the March in this year, compared to the emerging market index, it went down. So it be getting weaker when we compare to the emerging market economies. So that's the reason it is acting as a tailwind to the gold price. We all know when dollar is weaker, gold price goes up. It is a tailwind to the commodities. And based on all the data points we connected, as in the last week video I mentioned, all the financial markets are interconnected. We saw the futures market is bullish on the gold, and the bond 2-year bond yield, we saw that it is acting as a leading indicator for the gold price. And also we saw the DXY forex market that is acting as a tailwind to the gold market. And repo market managed money is a little bit related to the repo market, so that is also connected to it. And swap market, 2-year inflation swap rate is giving the high chance of inflation can go up in the next 2 years. So we saw almost all markets here. Based on this analysis, I'm expecting gold is bullish in a couple of months. And this is my summary of this video. Gold price chart looks bullish to me, and the target is 3,800, support is 3,000 and to 2,700. Gold futures pointing upside with a target of 3,800 in next 21 months. Stagflation fear is acting as a tailwind to gold price along with the central bank's purchase. We saw that 22, 23, 24 years the central banks bought the gold, and now they are also continuing buying the gold. US dollar index appeared flat in last 3 months, but it is getting weaker with respect to the emerging market forex. US dollar 2025 is very close to year 1973 performance. Historical gold is bullish during stagflation period, like in 1970 we just saw that. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. Please like hit the bell icon so that you get notification whenever I upload a new video. Thank you so much. Bye bye.